Welcome back, friends. So we have few questions pending in chapter 6, that is regarding the cost rate. So in this session, let's see those questions. I think there are 3 more questions which are left out. Okay, so we will take those questions one by one. So first of all, we will take question number 6.4. Okay, so you can pause the video and you can read the question at once. And after that, we will read it together. Okay, so please pause the video and read it again. Now, I hope you all have completed reading the question. Now, what is given in this question? The books of Adarsh Manufacturing Company presents the following data for the month of April 2020. So there is a company and the company has given the following data for rupees 17,500 being 175% of the overhead or works overhead. Okay, you know what is works overhead? Works overhead is nothing but the factory overhead. Okay, works cost, factory cost, both these things, it refers to overhead. Got it? So what they say, labor cost is 17,500 and this 17,500 is what? 175% of the works overhead. So if works overhead is X, the direct labor cost will be 175% of X. Okay, and that 175% of X is nothing but 17,500. So using this information, what can you find out? You can find out what is the value of X or what is the amount of works overhead. Clear? Okay. Now, cost of goods sold excluding administrative expenses 56,000. So you know that cost of goods sold is computed before including the or before considering the administrative overheads as well as selling and distribution overheads, right? So before including these, the cost of goods sold that has the format of the cost sheet. In the format of the cost sheet, once we have computed the cost of production, then what do? You will adjust the inventory, opening inventory and closing inventory of the finished goods, and what you get is the cost of goods sold. And that cost of goods sold is given to be 56,000 and closing balances. So opening inventory and closing inventory as on 1st April and closing as on 30th April, it is also given. You know what is the amount of raw material, work in process, as well as the finished goods. Now, other information, you know how much is the selling expense, general and administration expense is given. Okay, then sales for the month is also given. Now, what are the requirements which you need to compute? You are required to compute the value of material purchased. Now, friends, if you read the question carefully, you will understand that they talk about direct labor cost, they talk about factory overheads, they also talk about general administration expense, but they are silent. The question is silent about one particular aspect, which is very much necessary for computing the cost of production. What is that? That is the value of materials. The material cost is not directly given in the question. Okay, so the question says that you have to compute what is the value of materials purchased. Inventory as on the beginning as well as inventory as on the end. So if you want to compute the material purchased, okay, you have the inventory position. So from the cost sheet, what can you find out? You have to find out the raw material consumed. If you get the raw material consumed value, okay, then from that you can arrive at the value of the raw material purchased, since you have the details about the opening inventory and the closing inventory. Okay, so your first objective is to compute the value of materials consumed, right? Now, what is the second aspect? Prepare a cost statement showing the various elements of cost and also the profit earned. So you have to prepare a cost sheet. Once you compute the materials consumed, then you have all the details to compare your cost sheet. So you go ahead with the cost sheet, prepare the cost sheet. Okay, friends, this is going to be like a question which can be asked for 8 marks or maximum 10 marks. Okay, but then if you just get the concept of how this cost of production is computed, okay, how this cost of production or cost of goods sold is computed, if you get that logic, then this is going to be an easy task. Generally, what happens is students just mug up the format of the cost sheet. Okay, they don't understand what is the significance of each item in the cost sheet, and how the cost sheet is prepared. Then this is not going to be a major problem for you. Okay, so let's do that. So question number 6.4. Okay, so what is the first requirement? The first requirement is to compute the value of material purchased. So computation. Now, to compute this, what should be your starting point? If you see the question, they have given something. What is that? They have given the cost of goods sold. Cost of goods sold works out to 56,000, which means that should be the starting point. See, this cost of goods sold considers or includes what all things: material cost, labor cost, overheads, then adjustment of WIP and adjustment of finished goods. Okay, so if you reverse work from the cost of goods sold, you will be able to compute the material consumed. And once you get the amount of material consumed, then you can easily compute the material per inventory. Okay, so computation of value of materials purchased, you can write it as reverse working. Okay, so you start with cost of goods sold. Cost of goods sold is given to be 56,000. Friends, actually, when you work back, you should not get confused. Certain things which you are adding when you prepare a normal balance sheet, it should be deducted now. Similarly, items which you were deducting earlier when you prepare a cost sheet in the normal format, it should be given the reverse aspect. Okay, so I think if you are confused, it's always better you first write a format of the cost sheet, then you go ahead. Okay, cost material cost, this is consumed plus labor plus your expenses. Okay, this will give you what? Prime cost. With the prime cost, what do you have to do? You have to add factory overheads. Now with the factory overhead, you should, so factory overhead, once you add it, you get factory cost, or I can say it is gross works cost. Okay, add opening WIP less closing WIP, you will get the net factory cost. Okay, net factory cost. Now what do you have to do? Once you get the net factory cost, then you can easily compute what? Cost of production. Okay, now this is the cost of production. Now what do you have to do? Adjust the inventory of finished goods. So add opening finished goods value less closing finished goods value. Okay, this adjusted will give you what? Cost of goods sold. Okay, so what you have is the cost of goods sold, that is 56,000. Now just see the reverse calculation. So once you have the cost of goods sold, then what you have to do? You have to find out the cost of production. How can you find out the cost of production? You have to, from cost of production, if you add opening finished goods value and less closing goods sold, if you want to go back with the cost of goods sold, you have to add closing finished goods value and less opening finished goods value. Okay, so that should be how you compute this. So what I'm doing is, with the cost of goods sold, I am adding at closing value or closing inventory of finished goods. What is closing inventory of finished goods? It's given to be 19,000 and opening is 17,600. So 19,000. Now less opening inventory, that is 17,600. So net amount, if you compute, it works out to 56 plus 19,000 minus 17,600. It is cost of production. Cost of production is 57,400. Okay, now with this we have to adjust the stock of finished, the work in progress. Okay, so again add okay, so closing WIP should be added, opening WIP should be less, should be deducted. So what is the amount? Closing is 14,500, opening is 10,500. 14,500 minus what? Opening inventory. Opening inventory is 10,500. So there is a difference of 4,000 basically. So 4,000 have to be added. So 57,400 plus 4,000 will be 61,400. This is factory cost, or let me write it as works cost. So right now we are starting, we are standing here, right? Okay, now what do you have to do? From this, with the prime cost, you have added factory cost, factory overheads to arrive at the works cost. So from works cost, if you want to get the prime cost, you have to deduct factory overhead. So less factory overheads. Okay, how do you determine the amount of factory overhead? If you see the question, they say that the works overhead or factory overhead, it is 175%, or the direct labor cost is 175% of works overhead. So that you can formulate an equal works overhead. Okay, I'm giving a separate note for that. Leave some space and open a working note. Okay, so I'm writing let works overhead be X. Okay, we have direct labor is equal to 175% of X, or that is equal to 1.75X. That is, what is direct labor? Direct labor is going to be 17,500. Okay, so 17,500 is equal to 1.75X, or X is equal to 17,500 divided by 1.75, that is rupees 10,000. Therefore, works overhead, it's an easy calculation, is equal to, I just formulated this equation because it will be even more clear to you. But when you do it for the exam, you don't have to do this much multiple steps. You can simply take 70,500 divided by 175%. That will give you 10,000. That will be the value of overhead. So it should be 10,000, right? Okay. So 61,400 minus 10,000 will be the prime cost, and that is 51,400. Now, from this 51,400, what do you have to do? You have to see, this is the prime cost. Here, prime cost is material. In this question, there is no mention about any direct expenses. So direct expenses will be 0. Okay. Then what is then remaining? Only material consumed and labor cost. Labor cost value you know. So from the prime cost, if it is the value of raw material consumed. So less direct labor, that is 17,500. So direct material consumed 51,400 minus 17,500, and that will be how much? 33,900. This is the raw material consumed. Now you know what is direct material. The direct material consumed. Direct material consumed is, what is the formula? This is equal to, okay, opening stock of raw material plus raw material purchased minus closing stock of RM. Fundamental formula. Okay, so I'm applying that. So raw material consumed is 33,900. What we need to find out is we need to determine this. Okay, so what I'm doing is, to get the value of raw material purchase, again you have to do the reverse calculation and less opening stock to get the RM purchased. So add closing inventory of raw material. What is closing inventory of raw material? Closing inventory of raw material is 10,600 less opening stock of raw material, that is 8,000. So the resultant figure will be value of material purchased 33,900 plus 10,600 minus 8,000. It will be 36,500. So 36,500 will be the value of material purchased. Okay, so this is the first part of the question. So you got the value of material purchased. Now what do you have to do? You have to prepare the cost statement. Okay, so that is the second part. Statement of cost for April 2020. Okay, start with the material consumed. We have already computed raw material consumed to be 33,900. Okay, with that, add direct labor cost or direct labor consumed. That is, what was the amount? 17,500. So you get prime cost. Prime cost will be, okay, 51,400. Now add factory overhead or works overhead. That is 10,000. Okay, so you get the gross works cost. $61,400. Now with this, add opening inventory of WIP. Okay, opening inventory of WIP is 10,500. And closing inventory of WIP is 14,500. Okay, now What is the net amount? The net amount will be cost of production. So 61,400 plus 10,500 minus 14,500. It is 57,400. 57,400. Now with this add opening inventory of finished goods. Opening inventory of finished goods is 17,600 minus closing inventory of finished goods. Closing inventory of finished goods is 19,000. So that is cost of goods sold. That is cost of goods sold is 56,000. Now what do you have to do? You have to take the items which you have not considered. That is, you have general administration expense and selling expenses. General and administration expense. $8,500. So total will be cost of sales. $56,000 plus 2,500, 58,500 plus 3,500, that is 62,000. Now what do you have? You know what is the sales? What is the sales? Sales for the month is 75,000. So cost of sales plus profit, that will give you what? The sales for the month. And sales revenue is 75,000. Okay. So what is going to be the profit? Profit will be the balancing figure, that is 13,000. And this is balancing figure. Friends, I hope this question is clear to everyone. It's a basic, it's not that difficult question, but you have to apply certain logics to do some reverse calculation in the initial part will consumed or value of material purchased. Then it's a straight case of pick and prepare the cost sheet, nothing else. Okay, right. So after this question, we are moving to the next question, that is 6.5, question number 6.5. So you can pause the video and please read the question carefully. Okay, so we'll read it once again. From the following particulars, you are required to prepare monthly cost sheet of Aditya Industries. So what you are asked to prepare is the monthly cost sheet of Aditya Industries. Okay, now what is the information you are having? Opening inventory, raw material. When you see against this finished goods, they give you the quantity. Okay, whereas the quantity is not given against any of other items. So there may be some significance for that quantity. Now closing inventory, what you have? Raw material is given, work in process is given, finished goods, the value is not given. So what does it mean? Inventory. Okay, closing finished goods inventory. So this is something which we have to compute. Okay, fine. Now going forward, raw material purchased, that is given. Then GST paid on raw materials purchased, ITC available, 7,20,000. Friends, we have already discussed it many times. Whenever there is ITC, input tax credit, which is available on the GST paid at the time of purchase of the raw material, what should be the treatment? The treatment should be, it should not be considered as the material cost. So this GST paid amount will not be considered as a part of purchased or raw material consumed. It should not be considered. So this 7,20,000 should be ignored completely. Okay, right. Now, next, wages paid to the production workers, 36,64,000. Then expenses paid for utilities, 1,45,600. Office allowance paid to the office staff, that is 1,21,000. And selling expenses, that is 6,46,000. Okay, so you have all these details. Now, there are some other informations given. Machine hours worked, 21,600. Machine hour rate, 8 per hour. Now, friends, what could be the reason why this information is given? Okay, you have the machine hours worked and machine number, what we learned in our chapter number 4. We learned in chapter number 4 that the fixed overhead, sorry, not fixed overhead, the overhead absorbed. Overhead absorbed is equal to, what is the formula? Machine hour rate per hour into number of hours consumed or worked, which means this information is given to compute what is the amount of factory overhead absorbed. Okay, now if you see this table, do you have any information regarding the production overheads or factory overhead? You don't have the amount of factory overhead absorbed, and accordingly you have to create the cost sheet. Okay, now next, unit sold 1,60,000, unit produced 1,94,000. Now what could be the significance of these two information? Okay, you know what is your opening stock quantity of fixed 10,000 units. Now how much did you produce during the year? 1,94,000. How much did you sell? 1,60,000. So the difference will be the closing stock. Okay, so the closing stock of the finished goods quantity can be computed, and that quantity should be valued. How you have to value? You have to value at the cost of production. We have already seen that in one particular problem. Okay, so using that, we have to determine what is the value of this finished goods. Friends, please note this particular adjustment. Okay, because this is little important. In some questions, they may not give you the value of the finished goods directly, inventory of finished goods directly. So in that case, using the cost sheet approach, you have to first compute what is the cost of production. Once you get the cost of production, the inventory of finished goods have to be valued at the cost of production. So you determine what is the quantity of the finished goods stock or finished goods inventory, and that inventory should be valued at the cost of production per unit. Okay, so we are going to see that here. Now, you have the information regarding the desired profit, that is 15%. It is not on the cost. That also you have to be little careful. Okay, so let's do the calculation first. Okay, so first we will compute the quantity of inventory of finished goods. Okay, opening inventory. What is opening inventory? Opening inventory is 10,000 units. With this, you have to add quantity of finished goods produced. How much did you produce during the current period? You produced 1,94,000. So what is the total number of finished goods? Total number of finished goods available for sale. Available for sale is 2,04,000 units. From this, you have to reduce less quantity of finished goods sold. How much have you sold? You have sold 1,60,000. So 1,64,000. 1,60,000 should be reduced. And what is the closing balance? The closing quantity of finished goods closing, that is 44,000 units. 44,000 units. Is that clear to everyone? Okay, so we got the quantity of finished goods closing. Now what you have to do? You have to find out the value at which it has to be valued. Okay, right. Okay, so now we will start preparing the cost sheet directly, and in the process we will value the finished goods also. So statement of cost, or you can even name it as cost sheet. Okay, so what should be the starting point? The starting point should be the material consumption. For material consumption, they have given you the raw material purchased. So take raw material purchased, add opening value of raw materials, opening stock of raw materials, then less the closing stock of raw material. So raw materials purchased. What is the amount you have to take here? You will take only 1,44 lakhs. You are not required to take the GST paid as the ITC available. Okay, so add taxes paid on purchase. How much we have to take here? Nil. Okay, what is the reason? The reason is ITC available for GST paid. Okay, now what do you have to do? With this, you have to adjust the inventory. So add inventory of raw material open. What is the value of inventory of raw material? Opening inventory of raw material, that is 12 lakh. So 12 lakh is added. Now less inventory of raw material closing. What is the amount? The amount will be closing is 14 lakhs. So you get the net figure as raw material consumed, and that will be 1,44 lakhs minus net. How much it comes to be? Minus 2 lakhs. So it will be 142 lakh. 144 lakhs plus 12 lakhs minus 14 lakhs. So 142 lakhs. Okay, so you got the raw material consumed. Okay, now what do you have to do? You have to add any direct labor cost. In a direct labor cost, they say wages paid is 36,64,000. So add direct labor 36,64,000. 36,64,000. Now, friends, I always say you have to check whether there is any direct expenses. Do you have any direct expenses? If you see the question here, expenses paid for utilities, 1,45,600. What is this? This is a direct expense. Okay, expenses paid for utilities. So paid for utilities. Okay, it is direct expense. Now, suppose you have some confusion. You don't know whether it is direct expense or factory overhead. Okay, whether factory overhead or direct expense, it doesn't make any much difference here. Here, why I consider it as direct expense, because factory overhead is already given separately. You have some information to compute the factory overhead. So the machine hour rate and the overhead recovery rate is given. So using that, factory overhead can be computed. So this is an information which is given over and above that. So I'm taking it as direct expense. Suppose you have a confusion. If you take it as factory overhead, it is the question will not change, the answer will not change unless you like in this case it might change because the factory overhead is not directly given, it is given in some other formula. So you have a confusion whether the formula, the overhead recovery rate that is given, whether it includes. Okay, so always better you can assume that these type of expenses are to be direct expenses. Okay, so amount is 1,45,600. So you get the prime cost. What is prime cost? Prime cost, the amount will be 142 lakhs plus 36,64,000 plus 1.456. That is 180 lakhs, then 9,600, right? So 180 lakh 09,600. That is the prime cost. Now what do you have to do? You have to add factory overhead. How do you compute factory overhead? It is given as machine hour rate into machine hours worked. That is equal to, what is machine hour rate? Machine hour rate is rupees 8 per hour into how many machine hours has been consumed? 21,600 hours. So what will be the amount? The amount will be 21,600 into 8, and that will be 1,72,800. Okay. Now what do you have to do? You have to add opening inventory of finished work in progress. Opening inventory of WIP is 18 lakhs. Okay. Then less closing inventory of WIP. That is also given to be 16 lakh 4,000. It should be reduced. So what is the cost of production? Cost of production is how much you get? You get it as 180,09,600 plus 172,800 plus 18 lakhs minus 16 lakhs 04,000. Okay, and it comes to 183,78,400 cost of production. Okay, now you got the cost of production. Now, do you have any idea what is the number of units produced? Okay, anyway, I will come to that. Now, what is the next one? The next one is you have to add the opening inventory of finished goods. What is opening inventory of finished goods? It is 9,60,000. Now less closing inventory of finished goods. This is something you have to compute. So working lot number Working note number, first one we have not numbered, so you can give it as WN1. Leave some space and compute. Valuation of closing inventory of finished goods. Okay, now finished goods should be valued at what? Cost of production. Okay, so what is the formula for value of finished goods? Closing inventory of finished goods. The formula will be, you take total cost of production divided by number of units of finished goods produced during the period. Okay, this multiplied by closing quantity of finished goods inventory. So here, what is the cost of production? The cost of production is 183,78,400. 183,78,400. You don't have to consider the opening value. Okay. Now, what is the number of units produced? The number of units produced during the period is 1,94,000. So it will be divided by 1,94,000. This is rupees. This is units into what is the closing stock quantity? The quantity of finished goods closing is 44,000. So multiplied by 44,000 units. What is the value? The value will be, just let's see how much you get. 183,78,400 divided by 1,94,000. Okay, multiplied by 44,000. So that comes to 41,68,297. So 41,68,297. Of course, there will be some rounding differences, doesn't matter. So I'm taking it as 41,68,297. This is reduced. So what is the cost of goods sold? Cost of goods sold will be how much? It will be 183,78,400 plus 9,60,000 minus 41,68,297. It comes to 151,70,103. 151,70,103. Now what do you have to do? With this, you have to add the office and administration expenses, traveling allowances paid to the office staff, as well as the selling expense. All these three things have to be added. So add administrating and selling overheads, which means first one, office and administration expense. What is the amount? It is 26,52,000. Okay. Next is traveling allowance. Traveling allowance paid to the office staff. So it is general administration expense itself. What is the amount? 1,21,000. Then selling expenses. What is the amount of selling expense? It is 6,46,000. 6,46,000. So the total cost of sales will be how much? Cost of sales will be, yes, 151,70,103 plus 26,52,000. 26,52,000 plus 1,21,000 plus 6,46,000. It comes to 185,89,103. Okay. Now what you have to do? Anyway, you know what is the desired profit. Add the desired profit. Okay. So add desired profit. What is desired profit? They say that desired profit is 15% on sales. 15% of sales revenue. So that you have to compute. How do you compute? So this will be sales revenue. Simple calculation will sufficient. If let sales revenue be X. So X is equal to, X is the sales revenue. X is equal to cost of sales plus profit margin. What is profit margin? Profit margin is 15% of X. That is X is equal to, what is cost of sales? 185, 89, 185, 89, 103 plus 0.15x, or okay, x minus 0.15x is equal to 185, 89, 103, or x is equal to 185, 89, 103 divided by, what is 1 minus 0.15? It is 0.85. Okay, so x is 185. What is the value of x? X means sales revenue. That is equal to 185, 89, 103 divided by 0.85. That is 218, 69, 533. 218, 69, 533. Okay, so 218, 69, 533 minus, what is cost of sales? 185, 89, 103. So desired profit is the balancing figure, that is 32,80,430. Now let's see whether this desired profit is 15% of sales revenue. 32,80,430 divided by 218, 69, 533. It comes to 15%. Okay. Therefore, if you want, you can find out the cost of sales per unit, rupees per unit. Okay. What is cost of sales? Cost of sales is 185, 89, 103. How much did you actually sell? The number of units sold was 1,60,000. So divided by 1,60,000, that will come to 116 rupees, 116.18. Okay, plus your profit is 32,80,430 divided by, again, number of units sold is 1,60,000. So that will give you 20.50. 20.50. So selling price per unit will be 218, 69, 533 divided by 1,60,000. So that is 136.68 per unit. Okay, this also you can show along with the cost sheet. That will also be helpful for the decision making. Okay, so this question is over, right? So this was question number 6.5. Again, this is a question which can be asked for 8 marks or 10 marks. Okay, right.